Good morning. How are you all? Fine. Okay. So, uh, yesterday we were discussing about what? Direct and that's it. Our discussion was going about section number 4. If you remember, section 4 is charging section. Okay. So, section 4 says what? What section 4 says? Come on, tell me. It talks about the chargeability of your total income during the previous year of every person. When that will be charged? During the assessment year. Okay. And at what rates? Prescribed rates. Very good. See, total income of every person is chargeable to tax, no? Total income of. So the charge of income tax is there on person. The charge of income tax is there on. So if you are a person, you are liable to pay income tax. If you are a person, you are liable to pay income tax. So who is a person? Come on, tell me. Who is a person? That is given in section 2 subsection 31. So the definition of person, if you can see, the term person includes. The person includes. See, there are two types of definitions. One is inclusive definition. Another one is exhaustive definition. Inclusive definitions will always start from the word includes. And exhaustive definitions will start with means. So the definition of person is inclusive definition. See, whenever the government, whenever the lawmakers, when they want to expand the meaning of a term, widen the meaning of the term, then that term is defined in inclusive manner. Which manner? So, see, in our general understanding, when someone asks, what is the meaning of person? We will see that you and I, we are what? Person. That is a common understanding of the word person. But under the Income Tax Act, the person does not mean just you and I. The person means what? What is given in section 2 subsection 31. Yes or no? See, the term person includes, number 1, individual. Number 2, Hindu undivided family. Number 3, company. Number 4, firm. Number 5, association of persons and body of individuals. And number 6 is local authority. And number 7 is artificial judicial person. So there are 7 categories. How many categories? Number 1 is individual. Please, with me. Okay. Number 1 is. Number 2 is Hindu undivided family. Number 3 is company. Number 4 is firms. Number 5 is association of persons and body of individuals. Number 6 is local authorities. And number 7 is artificial judicial person. These 7 categories are there. Okay. Now, if you see in these 7 categories, whatever entities are given, they are all treated as what? Person, for the purpose of Income Tax Act. For the purpose of. Now, why they are treated as person? Because they all have the capacity to earn income. And government wants to charge, the lawmaker wants to charge tax on the income earned by everyone, not just individuals. Because individuals like you and me, tell me, can I earn income? Yes. Can you also earn income? If you work, if you do something, you also can earn income. See, individuals are earning income. So their income will be liable to tax. But it is not just the individuals who will be liable to pay tax on their income, but even a company can earn income. So the income of the company will also be taxable. Even a partnership firm can earn income. The income of the partnership firm should also be taxable. Even a Hindu undivided family can earn income. So the income of that Hindu undivided family will also be liable to tax. In order to charge tax on the income of every entity, that entity is considered as what? Person. Because under section 4, charge is not on individual's income. Charge is on the income of the person. Getting my point? So number 1, who is a person? Come on, tell me. Individual. Now, who is individual? Natural human being. Natural can be a male, it can be a female, it can be a transgender. Yes or no? Even a minor child is individual only. Minor child, you know, na? But sir, minor child is not competent to contract. So what? But still minor child can earn income, no? Hello? We are not talking about the fact that who will pay tax on the income of the minor child. That is altogether, a thing which can be discussed later on. Who will pay tax on the income of a minor child? We are not talking about that right now. But tell me one thing, can a minor child also earn income? Yes or no? Minor child can earn income. See, my minor is very talented. Okay, he's singing. He's participating in big competitions. He's participating. He's doing stage shows and all. So by singing, he's earning income. Can a minor have such talent? And from his talent, can he earn income? Yes. So don't you think that his income should also be taxed? Yes or no? Then, for example, if I have taken, I have deposited some amount in the bank FD on the name of my minor child. So there will be bank FD interest on the name of my minor child. Yes or no? Now the income is coming on the name of minor child. See, minor is also an individual only, but he is a small individual. We all are big individuals. But don't forget, even minor is a natural human being. Yes or no? Even minor has the capacity to earn income. Yes or no? So minor child. Then a person of unsound mind. Can he earn income? Yes. Even he is a natural human being. So right now we are not discussing that whether to pay tax or not to pay tax. Right now we are discussing that who is a person, who is treated as a person under the Income Tax Act. So every individual, what did I say? Every individual, every natural human being is what? A person. Whether it is a male or a female or a transgender or a minor child or a person of unsound mind will be treated as a person because they are individuals. Yes or no? Number 2 is Hindu undivided family. Now, see, there are certain cases when you don't earn income on your name. The income is earned on the name of your family. See, I have one shop at my hometown. Okay. So, in that shop, my grandfather used to sit. So, my grandfather used to sit in that shop. Now, along with my grandfather, when my father, he grew up, my father used to sit in that shop. My uncle, my father's brother, he also sits in that shop. Everyone from the family is working in that shop and earning the income. But the income is not earned individually by them. The income is earned by all of them for the family. Their family is earning the income. So sometimes it may be possible that you are earning income on the name of your family. So who is going to pay tax on that income? Family. Because family is given a separate legal status in the eyes of Income Tax Act. Getting my point? So even the income is earned on the name of Hindu undivided family, even that income will be liable to tax because Hindu undivided family is given a separate legal status. Even a Hindu undivided family is treated as what? Person for the purpose of Income Tax Act. Because see, if Hindu undivided family will not be treated as a person, what everyone will start doing? Instead of earning the income on own name, individual name, they will start earning the income on the name of family. Because the income on the name of the family is not taxable. Getting my point? So everyone will start doing that like that, no? So hence the hence the lawmaker says that even the incomes earned by Hindu undivided family will be liable to tax. But in order to do that, Hindu undivided family should be treated as a person. Yes or no? Then third one is, did I say only Indian company? It can be an Indian company or a foreign company. It can be a public limited company or a private limited company. It can be a listed company or a unlisted company. Will not make any difference. If it is a company, it has to be a person. It has to be because every type of company has a capacity to earn income. Yes or no? And the government wants to charge tax on the income of Every person, everywhere the income is coming, the government is eyeing on that income. Getting my point? Hello. So company is the third type of person. Yes or no? Now next one is forms. Do you know partnership forms are there? Hello. You and I, we start doing business together on the name of partnership. Okay, I'm doing a business. For example, I'm having a cloth business. Okay, Gokul, no? Gokul is also having a cloth business. And myself and Gokul, see, I am earning income from my cloth business separately on my individual name. Gokul is also earning income from cloth business on his individual name. So individual is earning income? Yes. Will it be liable to tax? Yes. Individual is earning income? Yes. Will it be liable to tax? Yes. Later on, what we decide that if we are doing the same business, no, why not to do that business together on the name of partnership form? So we started doing the business on the name of partnership form. So now, is Gokul himself earning the income? No. Am I myself earning the income? No. Now the income is earned on the name of the partnership form created by both of us. Yes or no? So will that income be liable to tax under the Income Tax Act? The answer is yes, because form is also treated as a person. Yes or no? So any type of partnership form, will be treated as what? Person. Now wherever under the Income Tax Act, you see the term form, it always includes limited liability partnerships also. Yes or no? So even the LLPs are treated as what? Forms only. Even the LLPs are treated as forms. Yes or no? So number one, individuals. Number two, Hindu undivided families. Number three, companies. And number four, and forms will include LLPs. Yes or no? Now coming to the fifth part. Fifth category is AOP and BOI. AOP and what is the full form of AOP? Association of persons. And what is the full form of BOI? Body of individuals. Now pay attention. I will tell you, first of all, if anyone asks me that, sir, what is a partnership firm? Come on, tell me, what is the meaning of partnership firm? Can I say partnership firm is group of few persons? Yes or no? Group only, no? So when a group is formed, that group is known as what? Partnership firm. But in order to call that group a partnership firm, don't you think there has to be a partnership deed also? So whenever a group is formed and with that group there is a partnership deed, then the group which is formed with a partnership deed, that group is known as what? Partnership firm. Everyone clear about this? Okay. Now, sometimes the group is formed. Okay. Myself and Gokul, we are coming together. We are forming a group. But if partnership deed is not made between us, then the group formed by myself and Gokul cannot be treated as a partnership firm. Because in order to call the group as a partnership firm, there has to be what? Partnership deed. So under the Income Tax Act, partnership firm is what? Group formed with a partnership deed. Group formed with a partnership deed. That group is known as what? But what if that group does not have partnership deed? Then that group will be treated as either AOP or BOI. Only then the group will be treated as AOP or BOI. When few people coming together without any partnership deed, few persons coming together without any partnership deed, a group is formed, and if that group is there, then that group will be treated as AOP or BOI. Yes or no? Hello, sir. Now tell me, I now understood that whenever there is no partnership deed in the group, then the group will be treated as AOP or BOI. Sir, AOP, BOI, can I say AOP is a group, BOI is also this is a group of persons and this is a group of individuals. Body of individuals. Body of individuals means it is a group of only individuals. And association of person, it is a group of persons. Do you know person definition? 2 subsection 31. 1, 2, 3, 4, 5, 6 and 7. How many categories are there? 7. So anyone out of that category can be a member of AOP. Anyone out of that 7 categories can be a member of AOP, because AOP is a group of persons 1 to 7. Yes or no? And only individuals can form BOI. Only individuals can form BOI. So I will give some examples. Okay. You are supposed to tell me that whether that group which I am talking about is AOP or BOI. You are supposed to tell me. Okay, no? Now tell me. There is a group Mr. A and Mr. B. They are forming a group. So the group of Mr. A and Mr. B, will you call it AOP or you will call it BOI? You will call it BOI? Can you call it AOP? Sure. Sure. Don't you think Mr. A is an individual? He is a person. Hello? Mr. B is also an individual. He is also a person. So group of person can be AOP also, no? So whenever all the members in the group are what? Individuals. Whenever all the members in the group are individuals, that group can be BOI also, that group can be AOP also. Because individuals are what? Person only, no? Now tell me one more example I am taking. X and associates, it is a partnership firm, plus Mr. A. They are forming a group. Their group can never be treated as BOI. Their group will always be treated as. Why, sir? Because in order to be called as BOI, all the members in the group must be individuals. So all the members in the group are individuals, or there is a partnership firm also in the group. There is a partnership firm in the group, no? So now this group cannot be treated as BOI. It will be treated as AOP, because individual and partnership firm, persons, yes or no, they are forming a group. So that group will be treated as AOP. Now tell me, there is one company X Limited and there is one company Y Limited. They are coming together. They are forming a joint venture. Joint venture can be formed or no? Hello? Joint venture can be formed between a partnership firm and individual also. Joint venture can be formed between 2 companies also. So X Limited is a company, Y Limited is a company. Both companies are coming together forming a joint venture. Hello? Now tell me, the group of X Limited and Y Limited will be treated as BOI or AOP? BOI or AOP? Always AOP. It cannot be treated as. See, in order to be called as BOI, the group shall have all the members as individuals only. If even a single member in the group is a non-individual, then the group cannot be treated as BOI. It will always be treated as AOP. Hello, sir? Everyone. But now the problem arises that, sir, when all the members in the group are what? All the members in the group are, then that group can be treated as AOP also. That group can be treated as BOI also. Sir, when do I call this group as BOI and when do I call this group as AOP? We cannot call AOP as well as BOI. We will have to either call this group as, or we can call this group as. Getting my point? So now pay attention. See, I will give you one example. Okay. There is one Mr. X. Okay. Mr. X is about to die. He is about to die. He is lying on his deathbed. So at the time of his death, no, Mr. X is writing his will. So whenever the people think that they are going to die, no, So they think about their family, their properties and all, who will be, having my property, who will be having my bank balance, etc. after I die. So Mr. X was about to die, so he was writing his will. So under his will, what Mr. X wrote, that after my death, all my property, all my bank balance, everything will be given to my three sons. Will be given to my three sons in equal proportion. In what proportion? He wrote this thing in his will. Okay. So now tell me, all the three brothers are having equal share in the property of Mr. X, who happens to be the father of these three brothers. Yes or no? Now tell me, if Mr. X dies, so after his death, his will be executed. So at the time of execution of the will, how much part of the property belongs to the first son? 1/3. How much will belong to second son? 1/3. And how much will belong to third son? It is clearly written in the will that after my death, all my sons, all three sons have equal share in my property. The property should be divided, should be distributed amongst them in equal proportion. Yes or no? Now 1/3 of the property, for example, three sons, name of the three sons is Mr. A, Mr. B and Mr. C. Yes or no? So for example, 1/3 of the property, 1/3 of the share in the property given to Mr. A, 1/3 share given to Mr. B and 1/3 share given to Mr. Are three brothers coming together, or they are taking their 1/3 and going away? They are taking their 1/3 and going away. So for example, if the three brothers are not coming together, everyone is having their own respective share and leaving. So whatever income Mr. A will have from his 1/3 share will be taxable for Mr. A in his individual capacity. Whatever share in the property, 1/3 share which was given to Mr. B, from that 1/3 share, whatever Mr. B will be earning will be taxable to Mr. B in his individual capacity. Yes or no? Likewise, 1/3 share was given to Mr. C. From that 1/3 share, whatever Mr. C will earn will be taxable to Mr. C in his individual capacity. Yes or no? Did you understand this much? Now tell me, option was there to take respective share and go away. Option was there to take the 1/3 share and go away. But the three brothers decided not to divide the property. They tried to, they wanted to enjoy the property together. So instead of taking their own share, they decided to come together. They decided to come together and enjoy the property collectively together. Hello, sir. They could have taken their respective shares and go, but they decided to voluntarily come together to enjoy the property. So a group is formed. Now tell me, all the three brothers are together enjoying the property. All the three brothers are together enjoying the property. They are not doing any partition. Getting my point? So now tell me, all the three brothers coming together, a group is formed or not? With any, with any legal obligation, they are forming a group. They are forming a group compulsorily, or they are forming a group voluntarily. So whenever some individuals are coming together, voluntarily for a common purpose, then such group of individuals will be treated as AOP. Then the group will be treated as AOP. Yes or no? So if I say Mr. A and Mr. B, what did I say? Mr. A and Mr. B coming together voluntarily for a common purpose, for a common objective. Yes or no? Then this group of individuals will be treated as AOP. Yes or no? Hello, sir. Now my same example which I gave, in which Mr. X was about to die and he was writing his will. Just example, for example, Mr. X is about to die and now he is writing his will like this. After my death, all my property will be given to my three sons will be given to my, only if they stay together, otherwise the property should be donated to orphanage. Can there be a will like this? Yes. So Mr. X, who is dying, and while dying he is writing his will like this, that after my death, all my property belongs to my three sons. My three sons can enjoy my property only if, what did I say? Only if they come together. Collectively or together, they can enjoy the property. Getting my point? Collectively or together, they can enjoy the property. If they are not coming together, if they are not forming a group, they cannot enjoy my property. Then my property has to be donated to orphanage. Now, even if three brothers don't like each other, if they want to enjoy the property belonging to father, they will have to come together to enjoy the property. Now tell me, A, B and C coming together. They are coming together voluntarily, on their own wish, or they are coming together forcefully, by obligation of law. Forcefully, they are forming a group so that they can enjoy that property. Otherwise, the property will be donated, no? Hello? So now tell me, can Mr. A and B form a group? Voluntarily, they can form a group for a common purpose, for a common object. Then that group will be treated as. But if the group of individuals is formed forcefully, compulsorily, by any legal obligation, then that group of individuals will be treated as BOI. Getting my point, everyone? Hello? So tell me, how many types of persons are there? 7. Number 1 is? Number 2 is? Number 2 is Hindu undivided family. Number 3, companies. Number 4, number 5, association of person and body of individual. Sir, what is association of person and body of individual? When a group is formed, without a partnership, then that group will be treated as AOP or BOI. Now, sir, when the group is formed, and in that group, if any member is a non-individual, if in that group any member is a non-individual, that group will always be treated as AOP. That group will always be treated as, understanding? AOP is a group of persons. Any person starting from first point to seventh point, first category to seventh category, any person can be the member in AOP. Yes or no? Now, when the group of individuals is formed, that group will be treated as BOI. But it can also be treated as AOP. But for that, we need to know the difference between AOP and BOI. See, what is AOP? AOP is group which is formed for a common purpose, common goal, common objective. Yes or no? And that group is formed voluntarily. Then that group is known as AOP. Understanding or not? Now, if the group is formed and all the members in the group are individuals, hello, and that group is formed by operation of law. Group of individuals is formed by operation of law, not voluntarily. It is formed forcefully. It is formed compulsorily by operation of law. Then that group of individual will be treated as body of individuals. Understood this much? Now pay attention. See, group is there, having a partnership, deed. That group is known as, group is there, without any partnership, deed. Then that group will be treated as AOP or BOI. What is the difference between AOP and BOI, sir? AOP, 2 or more persons come together for a, then that group will be AOP. Any person can form, meaning any person can be the member in AOP. Now BOI, 2 or more individuals combined together by operation of law or compulsorily, then that group will be treated as BOI. Only individuals can form BOI. Done, sir? Next one. See, these examples I gave you. Okay? Done, sir? Now, local authority. Bangalore has a municipal corporation. What is the name of the municipality over here? BMC? P? BBM? P? Brihan? Mahanagarpalika. Okay, so that is a local authority. When you come to Gujarat, no, where I stay in Vadodara. You might not have heard about the name. There is a city known as Ahmedabad. You know the name of the city, Ahmedabad? So it is a small city near the Ahmedabad. So Vadodara is the name. So Vadodara has a municipal corporation. We call it VMC, Vadodara Municipal Corporation. Just like BBMT, there is one more municipal corporation in my town, my city. If you go to Ahmedabad, there is Ahmedabad Municipal Corporation. If you go to Chennai, Chennai is also having a municipal corporation, Chennai Municipal Corporation. If you go to any town, any city, you will find a Nagarpalika. You will find municipality. Hello, municipality or Nagarpalika. In the case of cities or towns. But if you go to small villages, villages will not have cities or villages will not have municipalities or Nagarpalikas. They will have Gram Panchayats. You know about that, no? So these are bodies known as local bodies. These are known as local authorities. And they are entrusted with the management of that locality. Management of the locality. For example, the entire Bangalore, to manage this locality of entire Bangalore, whose responsibility is to manage this locality? BBMT. So, BBMT is a local authority. BBMT is a local authority which manages the local funds, meaning the locality, on behalf of the state government. See, the state of Karnataka is so big, no? Hello? So the state government cannot manage the entire state on its own. It cannot keep an eye on every area. It cannot keep an eye on every locality. So to do that work of managing the different localities falling under a state. One locality is a small village. One locality is a town. One locality is a big city. So to manage all such localities, some independent authorities are formed. Independent authorities are formed. These authorities are known as local authorities, which manages the entire locality, like to take care of the cleanliness of the society, to take care of the sanitation work, to take care of the water supply, to take care of the lighting of the area. All such small things which are required in any particular locality. This particular authority takes care of those things, and this is taken care by these authority on behalf of state government. So these authorities are appointed by state government to take care of a particular locality, known as what? Local authorities. We call them municipalities, we call them Nagarpalikas, and in the village side we call them Gram Panchayats. Yes or no? Did you understand? Now I am talking only about local authority. So under the definition of person, local authority is treated as what? Person. Only local authority is treated as person. Huh? State government is not treated as person. Central government is not treated as person. Only local authority will be treated as person. Only local authority will be treated as what? State government is a person. Central government is a person. Meaning that any income earned by central government, any income earned by state government, will there be any income tax on that income? Why? Because they are not person only. Section number 4. Section number, charging section, says that the total income of every shall be assessed to tax during meaning that the tax will be imposed, tax will be levied, tax will be charged on the total income of every. But if you are not a person, no tax will be there on your income. Hello? So are you a person? Yes. Then on your total income, the income tax can be charged. But if you are not a person, how can the income tax be charged? So tell me, local authority is a person or not a person? Local authority is a person or not a person? So the total income of the local authority can be charged to income tax or cannot be charged? It can be charged because local authority is a person. But if I talk about central government, if I talk about state government, central government and state government, for the purpose of income tax act, they are not treated as person. But if you go to GST now, in GST, both central government and state government are treated as person. But are we talking about GST or we are talking about income tax act? Under the income tax act, central government is a person or not a person? State government is a person or not a person? So if they are earning income, don't you think state government is also earning income? Central government is also earning incomes. Hello? On their incomes, they are not liable to pay tax. Why? Because they are not. Why? Tell me. Yes. Obviously, no. Now tell me, income tax is collected by whom? Central government, no? So what central government will do? Earn income, charge tax on the income, and collect the income tax from itself. Does it make any sense? Hello? These are constitutional entities. Central government, state government are constitutional entities. They're forming such type of entities is not for the purpose of earning income. It is for the purpose of running the country, running the state. Yes or no? Hence, whatever income they might be earning is for the public welfare, socio-economic benefit. Then income is getting used. Getting my point? Why central government will earn? To spend for the society. Hello? To spend for the socio-economic benefits for the people. Why the state government will earn income? To spend for the society. To spend for the state. Getting my point? So, under the Income Tax Act, and it does not make any logic, it does not make any sense charging the income tax from myself on my own income. Getting my point? Who will pay tax? Myself. On what? On my income. So it is as good as taking out tax from one pocket and putting it in another pocket. What is the point of doing that? Getting my point? Hence, central government, state government not treated as person. But the bodies, the local bodies, meaning the local authorities, they are not central government, they are not state government, they are independent authorities given the interested with the work of managing any locality. They are treated as person. But when you'll see, when you'll go to CA final, no, in CA final, you'll learn about how to determine the taxable income of different types of persons, including local authority. That time you will come to know that majority of the incomes earned by local authority, it is not chargeable to tax, that gets exempted. Only few of the incomes are getting taxed, but majority of the incomes which are earned by local authority is what? Exempt from income tax. But that is not a part of our CA intermediate syllabus, so we are not going to learn it right now. But remember, even if local authority is there, its majority of the income is exempt, not liable to income tax, but still some incomes earned by local authority is also liable to tax, and tax can be levied on the income of local authority only if the local authority will be treated as what? Person. So the central government wants to charge certain tax on certain incomes earned by local authorities also. Yes or no? But that is possible only if the local authority is made as a person. Getting my point? Now, last but not the least, artificial judicial person. I want you to read this seventh part. Read it. AJP covers every entity which has come into existence as per any law, and not covered in point number. See, this is very dangerous. How smart the government is. First of all, they said, are you individual? You are a person. Oh, HF, you are also a person. Then, oh, you are a company person. Firm, including LLP, you are also a person. AOPBY, then also you are a person. Local authority, you are a person. Any other entity. What did I say? who is not covered from point number 1 to point number 6 will also be treated as person. They will be treated as artificial judicial person. If they are coming into existence because of any law, if they are coming into existence because of any law, cooperative societies are there. They are treated as AOP. But sometimes some registered societies are also there, no? So because of Societies Act, these type of societies are formed. Have you heard about the Institute of Chartered Accountants of India? The Institute of Chartered Accountants of India. Have you heard about it? ICAI. Our mother institution. Hello. ICAI is AJP. Artificial, judicial, coming into existence. Because of a law. There is a law in India. The CA Act. The Chartered Accountants Act 1949. There is a law in India which has given birth to this institute. So this institute is coming into existence because of any law. Hello. So institute is what? AJP, Artificial Judicial Person. Have you heard about the Institute of Company Secretaries of India? ICSI. That is coming into existence because of law. There is a separate law governing CS profession. Just like the CA Act, there is another law, CS Act. Yes or no? Because of a separate law, this entity is coming into existence. Have you heard about SEBI? What is the full form? SEBI, no? That is a body which takes care about the securities exchanges and all. Yes or no? So, SEBI is a body, SEBI is an entity which is coming into existence because of SEBI Act. There is a SEBI Act, and because of SEBI Act, this entity SEBI is formed. Getting my point? Now, you might have heard about different types of trusts. Trusts you have heard about? Religious trusts are formed, charitable trusts are formed. So because of any law, that law is giving birth to this kind of entity. Because of any law, any entity is coming into existence, then that entity will have artificial existence. Getting my point? Known as artificial judicial person. Everyone got it or not? Tell me. So understand one thing. You have to ask yourself that is this entity getting covered from point number 1 to point number 6? If the answer is no, and the entity is coming into existence because of operation of any law, then that entity will be known as artificial judicial person. Done? So this was the definition of person. Now read note number 1 and read note number 2. Then I will explain. First you are supposed to read it. Read it very slowly. See, the first note which is there, all these have separate legal status. So the classification is done based on the legal status. Okay. Now, legal status, based on the legal status, the classification is done, and that classification of the person is done in 7 categories, because for every legal status, there are separate tax rates. Getting my point? So, how much tax an individual will pay? How much tax an individual will pay? Separate tax rates are there. How much tax a company will pay? Separate tax rates are given. Okay. So, in order to charge separate tax from separate type of entities on their incomes, this classification is done for the person, and that is done by keeping in mind their legal status. Getting my point? That is note number 1. So from this note, we come to know that there are different tax rates applicable to different types of persons. Yes or no? Now, profit motive is necessary or not necessary? Profit motive is necessary or not necessary? You are a person, that's enough. Hello? Your profit motive is not necessary here. We are just classifying you as a person right now. See, sometimes a body is formed, sometimes a group is formed. But that group is not formed with an intention to earn any profit. That group is not formed with an intention to earn any income or earn any profits. Getting my point? So what? Still you are a person. We are not saying that what is your intention. Your intention may or may not be to earn income. Your intention may or may not be to earn profits. It will not have any effect on your classification as person. Getting my point? See, sometimes the trusts are made, no? So trusts are usually not made with an intention to earn profits, but still those trusts are treated as what? Person. Because they have the capacity to earn income. Getting my point? So person, person, person. Whatever entity is written in the definition of person is only because they have the capacity to earn income. Whether the income is earned by them or not will not make any difference. Whether they are formed for profit motive or not will not make any difference. Once they are covered in the definition of person, they are person. Whether they are going to pay tax or not, that is a thing which we will decide later. Whether they are formed with a profit motive or not, whether they are earning income or not, that is the thing which we will decide later. But right now, in order to treat you as a person, we are not giving any importance to the fact that profit motive is there or not. Income earning objective is there or not. You are a person right now. Getting my point, everyone? So this was your note number 2. So everyone should be aware about this term, person. Now see, later on when you will grow up, when you will become a chartered accountant, not just the individuals, you will have company also as a client. You will have a partnership firm also as a client. Yes or no? You can have any association of person or body of individuals. You can also have a local authority as your client. You can also have AJPs as your client. So as a CA student, you are right now supposed to learn that how to determine the total income of every type of person, how to determine the tax liability of every type of person. But in the CA intermediate syllabus, you are going to learn only about individuals. In the CA intermediate syllabus, you are going to learn only about individuals. How to determine the total income of a person who is individual. How to determine the tax liability of a person who is individual. How to determine the total income and tax liability of a company. You learn in final CA. How to determine the total income and tax liability of partnership firms, AOPBY, local authority, other entities. You learn in CA final. But the process will remain same. The ideology will remain same. The law will remain same. It is not going to change. The base is to be made in CA inter. And that base, slowly and gradually you will build the entire building of income tax. But that time you will be in CA final. Getting my point, everyone? So right now, the main focus will be on individuals. Getting my point? Now tell me, see the definition of the term assessee. I am talking about this term now. Okay. Now see, this definition which is given here, no, it is just for the purpose of information. It is just for the purpose of information. You are supposed to remember exactly what I am going to tell you. Remember only that much. That is sufficient for you. Other than that, whatever is written here, just read it once. That's it. That will be enough. Now tell me, if you are coming to class today, okay, you are a student. I am your teacher. So we have a relationship of teacher and student. God forbid, if something happens to you, you fall sick, you'll go to a carpenter or a doctor. So at that time, when you will go to the doctor, there will be a relationship of doctor and patient. Getting my point? Now, for example, if you have to file a case in the court, you will go to a lawyer. Then there will be a relationship of lawyer and client. Getting my point? So whenever a person, what did I say? Whenever a person becomes liable to pay tax as per the provisions of Income Tax Act, as per the provisions of, or any other sums as per the provisions of Income Tax Act, not just the income tax, but other sums like interest, penalties. They are not tax, but they are other sums. So if you are a person, what did I say? If you are a person, you are becoming liable to pay tax or any other sum as per the provisions of Income Tax Act, you will be treated as an assessee. Full stop. That's it. You will be treated as an. Now the income tax department will not call you person. They will call you assessee. So this is a term which you came to know for the first time. And every now and then, every lecture which we are going to take now, this term will be spoken for at least 100 times. Every lecture you will see assessee, 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 assessee. In night also when you will be sleeping, you will be having assessee, assessee, assessee in your dreams. This term is what? Repetitively coming in the Income Tax Act. And what is the importance of this term? Assessee. Assessee is a person from whom we are supposed to collect tax or other sums. Oh, I am an assessee. Why? Because I am liable to pay tax or other sums as per the provisions of Income Tax Act. So under the Income Tax Act, now for the Income Tax Department, you will no more remain a person, you will become the assessee. Getting my point? So to become an assessee, you must be a person. But every person becomes an assessee, that is not necessary. Now tell me, one simple thing I'll ask you. Are you a person? As per the definition given in section 231, are you a person? But do you pay income tax? That means you are not an assessee. That's it. Am I a person? Am I a person? Am I an assessee? How come? Because I am earning income and I am liable to pay tax on that income to the Income Tax Department. Yes or no? So, whenever there is a person and that person is liable to pay tax or any other sum also as per the provisions of Income Tax Act, then that person will be known as assessee. Then the relationship of Income Tax Department and assessee will come into existence. Then the department will come to you. Then you are liable to go to the department. Then the tax will be collected from you. Getting my point? So, one statement I am telling you, every assessee must be a person. However, every person is not an assessee. True or false? True. Very good. Understood? So, this was your person and this was your assessee. The definition of assessee is given in section 2 subsection 7 and the definition of person is given in 2 subsection 31. But basically we were not doing definitions. We were doing in the charging section the total income of every shall be assessed to during the act. We have completed this thing. Now we are going to discuss about very important, very important. If you don't understand the difference between previous year and assessment year, your entire CA intermediate studies of income tax is a waste. Because without these two terms, you cannot move ahead. Assessee word is very important, no? Likewise, the word previous year and assessment year, these two words are also very important. Every lecture, previous year, assessment year, previous year, assessment year, every time you are going to hear these words from my mouth. So now, what is the meaning of previous year and what is the meaning of assessment year? What is the definition? Everything we are going to discuss, okay? Now tell me, have you heard about calendar year? What is calendar year? The year which starts from 1st January and ends on 31st December, that is known as calendar year. Yes or no? Have you heard about financial year? What is financial year? No, very wrong. You're absolutely wrong in that. Financial year is the period for which the financial set of books of accounts are maintained. That is known as financial year. And usually it is from 1st April to 31st March. And why it is kept from 1st April to 31st March, I will give you the logic today. But it is not necessary that everyone would be following the financial year 1st April to 31st March. I don't like 1st April to 31st March. I don't maintain 1st April to 31st March. I maintain Diwali to Diwali. Yes. See, I am a Gujarati. In Gujarati and Marwadi families, no, we, do Lakshmi Pujan in the night of Diwali. So, Deepavali is coming. So, it is our year end coming. It is our year end which is coming. So, we will close our books in the Diwali. Old books will be closed and we will open new books of accounts. So, we follow Diwali to Diwali for maintaining our books of accounts. So, for me, my financial year is Diwali to Diwali. Getting my point what I am trying to tell you? See, somebody might not like that profit and loss account for the year ended 31st March 2024. No, I don't like it. Why 31st March? I will end on 31st December. So, I maintain my books of accounts from 1st of January to 31st December. So, for me, my financial year is January to December because I am maintaining my financial set of books from Jan to December. So, it may be different for different type of persons. Getting my point? But majority of the people, majority of the persons follow April to March. Hence, we say that financial year is 1st April to 31st March. Getting my point? Everyone, what is financial year? Financial year is the period for which financial set of books are maintained. Got it, no? Calendar year and financial year does not exist in the Income Tax Act. Forget about these two terms. You are supposed to remember two terms. Number one, previous year, and number two, assessment year. Okay. So, assessment year and previous year. See, the year in which income is earned. That year is known as, and assessment year, the year in which total income of previous year is assessed. Assessed means identified, calculated. So, whenever you do calculations, whenever you do determination activity, that is known as assessment. Assessing. I am determining. Yes or no? So, the assessment year is the year in which the total income of the previous year is assessed and tax liability is determined. That is known as assessment year. Now tell me, the year in which we are right now, this is 25, 26. 25, 26 is going on right now. Tell me. So, under the Income Tax Act, the concept is assessment year concept. What concept is followed? Assessment year concept is followed. Meaning that whatever year you are into right now, the Income Tax Act says that this is assessment year going on. This is assessment year going on. In this assessment year, what you are supposed to do? You are supposed to assess the total income of the previous year and you are supposed to calculate, determine the tax liability on that total income. So, right now we are into 25, 26. This is an assessment year. Hello? In this assessment year, what we are supposed to do? We are supposed to determine, we are supposed to assess the total income of the previous year. Total income of the and tax liability of the previous year. Getting my point? Now tell me, from the point of view of this assessment year, what is the previous year? Any year prior to this is a previous year only, no? See, whatever years which have already gone are all previous years only. Hello. But with reference to this assessment year, which year will be treated as previous year? Immediately preceding financial year. What did I say? Immediately preceding financial year. Meaning, if I am into 25-26, if I am into, can I say 24-25 is the immediately preceding financial year? Hello? So, with reference to the assessment year 25-26, what will be the previous year? It will be 24-25. See, other years are also there. 23-24 is also there. 22-23 is also there. 20-21 is also there. 19-20 is also there. All are previous years only. Hello? Earlier years only. Previous years only. But with reference to this assessment year, which earlier year will be treated as previous year? Immediately preceding financial year. What did I say? Immediately preceding financial year. And that is not 23-24. That is not 19-20. That is not 17-18. That is 24-25. Immediately preceding year. Getting my point, everyone? So tell me, assessment year is 25-26. With reference to the assessment year 25-26, previous year will be immediately preceding financial year 24-25. So if I say that if the assessment year is 26, so what will be the previous year? 25. Okay, if I say assessment year is 27-28, what will be the previous year? Previous year will be, getting my point, what I am trying to tell you over here? Now tell me, in the previous year, what you do? Income earning activity happens. And in the assessment year, what you do? By taking this income of the previous year, you calculate the total income of that previous year. So in the assessment year, you are not doing anything for the assessment year. Whatever activity you are doing, it is for the previous year. Getting my point? So you will calculate the total income for previous year. You will calculate the tax liability for previous year. But all these activities will not happen in the previous year. It will happen in the next following year, known as assessment year. Getting my point, everyone? So first you will earn the income, or first you will calculate the income? First earn the income, then calculate the total income. Everyone? So the year in which you are earning the income, that year is known as previous year. That year is known as, and the year in which the total income of the previous year is assessed, tax liability is determined, that year is known as assessment year. Got it, everyone? Sure? Assessment year will come first and then previous year will come, no? Or it is reverse? Reverse, no? Previous year will come first and then assessment year. Previous year what we do? And assessment year what we do? Assessment of total income of the previous year and tax liability of the previous year. Getting my point? Now, I would like to ask you, if somebody tells you to define previous year, come on, define previous year. Previous year is the year in which the assessee earns the income. That is the definition of wrong. That is not the definition of previous year. That is what you do in the previous year. I have not yet told you the definition. I am yet to talk about that. But what you do in the previous year, I have told you. So are they asking you in the exam to define previous year? Yes, then define previous year. Don't tell them that what you do in the previous year. They get irritated. See, in the examination, no, why you don't get the marks? Because you don't write what they are asking you. You write what you know. See, whatever they should ask me, I will write what I know. That is not the case. That is not the thing in which your professional exams are supposed to be given. Yes or no? If they are asking you define previous year, then mama, you are supposed to define previous year. You are not supposed to tell them that what you do in the previous year. If they are asking you what is the definition of assessment year, you will write assessment year means the year in which the total income of the Previous year is assessed and the tax liability thereon is determined. Gone, 0 marks. Because they are not asking you what you are doing in assessment year. See, this was for the sake of understanding that what is happening exactly. The concept of previous year, concept of assessment year, you have to keep these two concepts in your mind. But in order to do that, you should understand that what happens there. Previous year, the year in which you are earning the income, we call that year as a previous year. The year in which the total income of the previous year and the tax liability thereon is determined, assessed, that year is known as assessment year. This is just for the sake of understanding the meaning. This is not the definition. Now, if we come to the definition, no, see, 2 subsection 9 defines the assessment year. Defines the assessment year. And there is section 2 subsection 34, read with section 3. That defines your previous year. Getting my point? So, what is assessment year? What is previous year? Definition. Shall I? Everyone, assessment year this is not an inclusive definition. This is meaning is restricted. Whatever will be given in this definition, the meaning of assessment year is only that much. Nothing more, nothing less. The meaning is this much only, which I am going to write. Everyone. So, means, assessment year means a period of 12 months starting from 1st April every year. So, every year from 1st April the period will start, and that period will be for 12 months. That period is known as assessment year. Every year from 1st April, the period of 12 months will start, and that period will be known as assessment year. So, can I say 1st April 2026. 1st April 2026. A period of 12 months will start. Period of 12 months will start. So, this period of 12 months, which starts from 1st April, don't you think it has to end on 31st March 2027? This period will be known as, and this is assessment year. In this year, what will happen? In this year, what will happen? You will assess, you will determine the total income and tax liability of the previous year. Understanding? But if you talk about the definition, in this year what we do, that is known. But the definition says that the assessment year will always start on. It cannot start on 2nd April. Can you start the assessment year on 2nd April? It has to start on. I don't like 1st April. I want to start from 1st January. Can you start the assessment year from? If you are individual, if you are an individual assessee, if you are a company assessee, if you are any type of person, for all the taxpayers, for all the assessees, listen carefully. Income Tax Act will assess your income in the assessment year. You are also liable to assess your income in the assessment year. And the assessment year, everyone which we have to follow is a period of 12 months, which will start every year from 1st April. So, is it for only one person or for all of us? Everyone has to follow this assessment year. for different taxpayers, different years cannot be followed. There has to be uniformity. Getting my point? So, a company's income will be assessed in assessment year. Assessment year 26, 27. Income of the previous year 25, 26 will be assessed. For every individual, his income will be assessed in 26, 27. Hello? But that income will be for previous year 25, 26. For every individual also that will happen. For every partnership firm also this will happen. Getting my point? So assessment year, tell me the definition. It is a period of 12 months starting from 1st April every year. It cannot start on any other day. Every year it will start from 1st April only. Can it be a period of more than 12 months? Not. Can it be a period of less than 12 months? Or always 12 months? Because the definition exclusively says that it is a period of only 12 months. So, assessment year can never start on any other day except 1st April. Assessment year cannot be less than or more than 12 months. It will always be for 12 months. Yes or no? Now, coming to the definition of previous year. Coming to the definition of, as per 2 subsection 34. Previous year means the previous year as defined under section 3. Under section 234, definition of previous year is there. What is previous year? So, 234 says that previous year, for the purpose of Income Tax Act, the previous year means that previous year which is defined under section. So now we'll have to go to section number 3. Getting my point? So under section 3, they are saying that previous year means the year or financial year immediately preceding to the assessment year. Previous year means the year or financial year which is immediately preceding to. Now have you written assessment year? So the year which is immediately preceding to the assessment year, that year is known as what? Previous year. Everyone understanding? So tell me, the year which is immediately preceding to 26, 27 has to end on. Only then from 1st April the assessment year will start. See, in order to start my assessment year will always start from 1st April. But to start the assessment from 1st April, I have to end the earlier year. That means the previous year has to end on 31st March only and no other day. Because if you will end your previous year from some other day, then your assessment year will also start on some other day except April, 1st April. Yes or no? So if my assessment year has to start from 1st April, that means my previous year has to end on. Now tell me one thing. The year which ends on 31st March 2026. The year which ends on 31st March 2000, that year is previous year with reference to assessment year 26, 27. Getting my point? Hello, sir. So tell me, if it is a year, so usually a year is, so can I say my previous year will start from 1st, 25. So can I say this is my previous year 25, 26, which is a period of, can it be more than 12 months? Then it will enter into your assessment year, no? It can never be a period of More than 12. Can it be a period of 12 months? Normally it is a period of, can it be a period of less than 12 months? Yes. Because nowhere it is written that previous year is also a period of, see the definition. Previous year means the year which is immediately preceding to the, meaning that it has to end on, and normally it will start from, but it is not necessary that always it will start from 1st April. 3 exceptions. How many exceptions? In case of new business coming into existence for the first time, in case of new business, in case of new profession, or in case of new source of income coming into existence for the first time, its previous year will start from the date on which it is coming into existence. First previous year will start from that day. Getting my point? So for example, today is 2nd of October. Hello? If I am starting a business today, if I am starting a profession today, if a new source of income is coming into existence today, so for that new business, for that new profession, for that new source of income, the first previous year will start from today, 2nd of October till 31st March. 2nd October to 31st March is not 12 months, it is less than 12 months. So the previous year can be a period of less than 12 months. Hello? But for this same business, same profession, same source of income, the next previous year will be of 12 months, because next previous year is not the first previous year. Getting my point? Will I do the same business in the next year? Yes. Why not? Yo, I start the business and I will close, or I will continue. Will I do the same profession in the next year? Yes. Will I have that same source of income in the next year? Yes. So next year, from 1st of April, the year will start and it will end on 31st March. Because in the next year, it is not a new business, new profession, new source of income anymore. Getting my point, everyone? So tell me, previous year can be a period of more than 12 months. Yes or no? Previous year can be a period of 12 months. Previous year can be a period of less than 12 months. Not always, but in 3 exceptions. The first previous year, listen to me carefully. The first previous year for a new business, new profession, new source of income coming into existence for the first time can be a period of less than 12 months. You cannot end the previous year on any date other than 31st March. Your previous year has to end on, but it may start from 1st April or it may start on any other date also. Getting my point? So tell me, did you understand assessment year? Did you understand previous year? So whenever I talk about assessment year, we are basically talking about this previous year only. Whenever I am saying this previous year, I am talking about this assessment year only. Getting my point? They are interchangeably used. So assessment year 26-27, the relevant previous year is assessment year. Now see, I have written no, if my assessment year is 26-27, so the relevant previous year will be 25-26. If I say that if my assessment year was 25-26, so what was the relevant previous year for that? 24-25. This is already gone. Now tell me, if my assessment year will be 27-28, so what will be the relevant previous year? Previous year 26-27. Are you all getting my point? Now can you see something here? Right now, no? Right now, we are into 25-26. We are into 25-26, no? So 25-26, this is a previous year going on. Next year will be the assessment year for this previous year. And don't you think this is an assessment year for previous year 24-25? So a year has a double role. 1 year, a single year has a it is a previous year in itself. You are earning income in this year. Hello. Income of this year will be assessed in the next year, known as assessment year for this year. Getting my point? And this is itself an assessment year for the earlier year, previous year. Getting my point? So a single year has a double role. It is a previous year in itself and also an assessment year for the earlier year. Getting my point? So tell me, this was your previous year and assessment year. Now, in your examinations, in your previous year 25-26, previous year, you are going to earn income in this year. But let me do one thing. I will not write down this thing. I will I want to know. Yesterday, we had a discussion about the Finance Act, how the budget is presented in the parliament. Do you remember that? How the budget is presented? Our finance minister comes in the parliament, presents the budget. That budget is known as finance bill. Then discussion happens, voting happens. The finance bill is passed with majority. Majority votes are given, so it is passed in the parliament. Then it becomes Finance Act after the president gives assent. Yes or no? The entire thing we discussed yesterday. Do you remember that? So tell me, if I talk about 1st February 2000 and the budget will come, known as 2025. From this finance bill only, Finance Act 25 will be made. Yes or no? Now, Finance Act 25 will have amendments. Finance Act 25 will have amendments in GST law, amendments in Income Tax Act, amendments in all the taxation law, every taxation law, whatever amendments are to be done, those amendments are there in this Finance Act. Yes or no? Now, for example, we are talking about which law? Income Tax Act. So, the amendments which are to be made in the Income Tax Act, these amendments are there in Finance Act 2025. Hello? So, what I'll do? I'll pick up the amendments of Income Tax Act. I'll pick up the amendments of Income Tax Act and I will have my Income Tax Act with me. I will now include these amendments in the Income Tax Act. Now I have latest Income Tax Act in my hands. Income Tax Act 1961. Income Tax Act 1960 as amended by Finance Act 2000. Now don't you think whatever Finance Act amendments are there in the Income Tax Act, as per this law, what did I say? This law will be applicable on the incomes earned in 25, incomes earned in, so whatever income which you are going to earn in 25-26, on those incomes, are you liable to pay income tax? Yes. As per which act? Income Tax Act 1960 as amended by. So as per this law, your income will be charged to tax. Income of which year? Income of which year? And that will be charged to tax in the next year, known as. So can I say this is the assessment year? Can I say this is the, and can I say if you are going to learn this law with me, I told you yesterday only that I am going to teach you this law. And this law is applicable for your attempt May 26, September 26 and so in every examination paper, the examiner will ask you calculate the total income and tax liability in the assessment year 26-27 from the details given for previous year. Every question paper will have previous year 25-26, assessment year 26-27. So now, today, let us fix our previous year and assessment year. If I ever ask you that what is our previous year? What is our assessment year? Because we are going to learn the law which is applicable for this previous year and assessment year, which is applicable for our examinations. Getting my point, everyone? Hello? Sure, sir? So my previous year, 25, 26. My assessment year, your previous year, your assessment year. In the examination, what is the previous year? What is the assessment year? Because we are learning the law which is applicable on the income of previous year 25, 26. Getting my point, everyone? So this was your previous year and assessment year concept. Let's do it once from notes. Okay. See. Definition of assessment year. Assessment year means 12 months starting from, did I tell you this? Now, 1st April 2026 to 31st March 2027, 12 months period. Can I say this is the assessment year? Assessment year 26. Now, with reference to that assessment year, what is the previous year? So, previous year is defined in section. Previous year means the previous year as defined under section. So, now you are supposed to come to section number. Section number 3 says that previous year means the financial year. So, what was your assessment year? So, the financial year preceding to this year, which will be normally a period of 12 months. But can it be a period of more than 12 months? Can it be a period of less than 12 months? Yes. So, the assessment year always a period of, previous year normally a period of, however the first previous year, however the of a new business, new profession, new source of income can be a, did I explain all these things? Very good. Now, read this note. Just now, 1 minute back, I was discussing this part. Why I was discussing? Because I wanted to explain this note. The Income Tax Act, as amended by, is applicable for my attempt 26 September, and therefore the questions in the examination would be framed for previous year and sure, no? Sure? Okay. Now, coming to the definition of, again come to the charging section. We are actually discussing charging section only, no? So now tell me, the total income of every shall be assessed to tax during the, at what rates? Now tell me, have we discussed the definition of person? Previous year is done, assessment year is done. Now we are going to discuss about total income. Are you a person? Your total income of the previous year, no? Your total income of the will be charged to tax during the, so tax will be charged on that total income in the assessment year. Charging will be done in the assessment year, yes or no? Charge is not in the previous year, charge is in the, but the charge is not on the income of assessment year, charge is on the income of the, and that income is not income, that income is total income. So now what is total income? Come on, tell me. Can you calculate total income? Simple, sir. What I will do, in the previous year, whatever incomes I have earned, no, add all the incomes on the calculator. Total income. Is it that easy? How will you calculate your total income? See, for example, you are standing in assessment year 26. So in the assessment year 26-27, your total income of the previous year will be charged, no? So now you will have to think about the incomes which you have earned in the previous year, so now you are thinking about the incomes which you have earned in the previous year, all the details you had. So from all the details of the previous year, starting from 1st April 2025 till 31st March 2026, whatever incomes you have earned, you add all the incomes, you total all the incomes, what you will get? Total income. Simple, no? No. Total income is not to be calculated like this. Biggest button on my calculator is, sir, plus. So what I will do? Plus. Total of all the incomes is, no. Now we will learn that how to calculate the total. This is very critical, very, 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 very important for you to know. Because if you don't know how to calculate, how will you calculate the tax? Because tax is charged on, tax is charged on, tax is charged on. At what rate? Rate I will tell you later. But the rate of tax which you are supposed to apply on a value, that value is what? Total income. If the government will tell you, calculate your total income on your own, okay? You only decide that how to calculate your total income. Bloody, you will not allow your total income to be more than zero. So that much risk they cannot take. And they will not tell the department, you only decide how to calculate the total income. Department will kill you. They will calculate your total income. Very big amount. So how to calculate the total income? You will decide. Department will decide, or law will tell you. Yes. So the law will tell you how to calculate the total income on which the income tax is to be charged. Getting my point, everyone? So now calculating the total income. We are in the assessment year. Calculation of total income will be done in the previous year only, no? Calculation, assessment, determination of the total income will happen in. So I am standing in the assessment year. What is my assessment year? What is your assessment year? What is the assessment year given in the question paper? Always 26. So in this assessment year, I am standing. Now in this assessment year, I have to calculate the of the. So now I will have to check previous year, starting from this to this. Whatever incomes I have earned, whatever incomes, yes or no? Whatever something which comes in is what? Income, receipt. This is known as receipt. This is known as. So I will have to first check, because see, receipts can only become income, but it is not necessary that every receipt will be your income. Every receipt can be your income. Hello? I'm coming to teach you over here. Will I get something to do this? KS Academy will give me my fees, my remuneration to teach you. You are a student of KS Academy. Hello? So you are coming here to learn. But to teach you, KS Academy has engaged me. Hello? So am I giving my services to you? No. KS Academy. I am not giving services to you. KS Academy is giving services to you. But to provide that services, KS Academy has engaged me. Hello? So I am coming here, teaching you. Will I get money? Do you get my, do you give me money? Who will give me the money? So I am getting some money from KS Academy. Is it my receipt? Something is coming in. Is it my receipt? From 1st April 2025 till 31st March 2000, I might have many receipts. Out of all the receipts, this is one of my receipt. Is it my income? Is it my income? Yes. And I will have to pay income tax on this. Now, wait. I was going to railway station. There is one lottery ticket vendor. You know, now lottery tickets? So lottery ticket vendor is there outside the railway platform, and I bought one lottery ticket from that vendor, and fortunately I won the lottery, 1 crore. 1 crore lottery I won. So now, will I get 1 crore as a receipt? Yes. It is my lottery winnings. It is my lottery. Is it my income? Yes, it is my income. Will I have to pay income tax on this? Yes. Now, what happened? No, I was not, having enough money to buy a car. I wanted to buy a car. I was not having enough money. Car was costing 10 lakh rupees. I had only 4 lakhs. I don't have the balance 6 lakhs. So I went to one of my friends, or I went to a bank and I asked for a loan of rupees. So my friend or my bank gave me 6 lakhs. 6 lakhs coming to me or not? 6 lakhs coming to me or not? Is it a receipt for me? Yes, but it is not my income. It is a loan. Understanding what I am trying to tell you? See, from 1st April 2025 till 31st March 2000, during the previous year. If I say during the previous year, means from 1st April to 31st March. During the previous year, I might have many receipts. But don't you think all the receipts which I would be having will not be my incomes? Will not be my, out of all the receipts, some receipts might not be my income, but some receipts might be my income. Sir, how do I know that the receipt which you are having is your income or not your income? Because this was the problem which you faced. The moment I said, KS Academy giving me money, is it my receipt? Hello? Is it my income? I told yes, but initially you were saying no. There was a confusion, no? Second example I gave, second example was lottery winnings. Hello, sir? Lottery winnings was also receipt. I said that it is my, but somewhere deep down inside you are, how come it is your income, sir? There was a doubt. So I'm resolving that doubt now. Whenever you will have a receipt, the receipts are always of two types. Receipts are always of revenue receipts, capital receipts. Have you heard about it? Revenue receipts? Revenue receipts. What are revenue receipts? The receipts which happen from a definite source on a regular basis. There is a definite source from where the receipts are happening on a frequent or a recurring basis. Those type of receipts are known as. So tell me, if I am coming here, KS Academy, I am engaged with them on a regular basis. Every month I will come, I will teach, I will get money. Every month I will come, I will teach, I will get money. So in the course of my profession, regularly I am giving services and I am getting something in return as my remuneration. Getting my point? So the remuneration which I am getting from KS Academy by providing my services again and again, again and again, again and again. Is there any regularity? Is there any frequency? Is it a revenue receipt or a capital receipt? Revenue receipt. Now, for example, I'm working in Reliance. Reliance is a big company. I'm an employee in Reliance. So every month I will get salary for working as an employee. Will I get salary every month? Tell me yes or no. This month I'm working, I'm getting 50,000 salary. Next month I'm working, I'm getting 50,000 salary. Next to next month I'm working, I'm getting 50,000 salary. Every month I'm getting 50,000, 50,000, 50,000, 50,000. 50,000 is my receipt from my employer with whom I am working. Yes or no? So can I say that 50,000 is regularly received by me from a definite source? This is a revenue receipt. Getting my point? One more example. I am having a property which I have given on rent. Can I have a property? Can I give it on rent? So that tenant, will he give me rent on a monthly basis? Every month rent is coming. There is some regularity. Hello? From a definite source, from my property, I am earning rent on a regular basis. That is a revenue receipt. So whenever there is a receipt which is coming from a definite source regularly, hello, regularly, That type of receipt is known as revenue receipts. Under the Income Tax Act, all the revenue receipts are your incomes. All the revenue receipts are your regularity is there, and you know the source from where it is coming. Yes or no? So they are treated as your income. Normally they are taxable, but sometimes some revenue receipts are exempt also. See, right now I am not talking about it is taxable or not taxable. Hello. Right now I am talking whether the receipt is a revenue receipt or a capital receipt. Revenue receipt is an income or not? Income. Capital receipt is an income or not? For that I will have to explain the capital receipt first. Capital receipt, you know. What is capital receipt? Come on, tell me. There is no regularity. There is no frequency. You don't know till the time it is not received. You don't know from where it is going to come. For example, you have some gold at your home. You sell that gold and you get the money. Do you do it again and again? But you did it only once and you got the money. So the money which you are getting by selling your asset, the money which you are getting by selling your is a capital receipt, because you don't do it again and again. Until the time you don't sell it, you don't know that you are going to get that money. Hello? Lottery ticket, capital receipt. Loan, capital receipt. So all the receipts which are there but which don't come to you again and again, there is no frequency, there is no regularity. Until the time they don't come to you, you don't even know the source from where they are going to come. Getting my point? All such receipts are known as under the Income Tax Act. What did I say? Capital receipts are normally not treated as income. Did I say always not treated as income? Normally not treated as. But if the government wants to charge tax on capital receipts, if the government wants to charge tax on, these capital receipts will be specifically considered as income under the Income Tax Act. Getting my point? So revenue receipts are your income or not your income? Income. There is no requirement to specifically treat them as your income because they are your income. Everyone knows. Hello, sir. Revenue receipts are always your income. But capital receipts, normally not your income. But if the government wants to charge tax on that capital receipt, government will specifically consider the capital receipt as your income. Understanding? So there is a definition of income. Income is also defined under the Income Tax Act. See, what is income? That you know. But let us also define income, no? Government is saying, let us also define the income. So the definition of income is given in one section. 2 subsection 24. Okay. So we are going to continue with this after the break. Okay. Take a 15 minutes break, and after 15 minutes we are again going to meet and we are continue from here. Definition of income. Okay. See you in 15 minutes.